How's it going, everyone? And welcome to a special solo series of wealth strategy secrets of the ultra wealthy. I'm your host, Dave Wolcott. We get a lot of the same questions from our investors about infinite banking, tax efficiency, asset protection, strategy stacking, and how to actually build wealth outside of Wall Street. And we get it, we know you're busy. So in this series, I'm breaking down complex wealth strategy topics into short, tactical episodes that you can actually use to build legacy wealth. Whether you're just starting your journey or fine-tuning your portfolio, these episodes are designed to give you high-impact insights in just a few minutes. So let's dive in. Today, I wanted to demystify the topic of infinite banking. After talking to so many different investors and folks out there, it seems like there's so much confusion around infinite banking, and it really doesn't need to be that way. So today, let's talk about what infinite banking actually is. Well, it's simply a cash value whole life insurance policy that can be used to actually create your own private banking system. And this is set up through mutual insurance companies, which is important to note. It's not through stock insurance companies, but mutual insurance companies where the policy holders actually own the mutual insurance themselves. This also allows you to do self-financing where you can borrow against the policy's cash value instead of relying on traditional banking system. What this does is gives you financial control so you can maintain control of your capital and use it for whatever you want, whether you want to pay for your kids' college, whether you want to pay for financing that second house, or you want to use leverage to actually use the same dollar twice and invest in another asset. Now, what are some of the core benefits of cash value whole life insurance? Oftentimes, people are always asking about, like, what is the cost, or let's just say the rate of return can be typically about 6% right now. And a lot of people will say, well, I can get a better return in a different type of investment vehicle. And the way I like to think about this is with all the using cash value life insurance, it's actually a complete multiplier, right? So there are multiple benefits, and you need to stack all these benefits together to see if it makes sense for you. So one of those being the fact that it actually has guaranteed growth, right? Mutual insurance companies have actually been paying dividends since the Civil War, regardless of who's in office, in the current administration, what's going on in terms of geopolitical instability, things like that. They have constantly been paying guaranteed values. So that definitely gives me some peace at night. Also, to be sure and know that this is not tied to market volatility, right? So the underlying assets are very different, right? So you do not have exposure in this whole life policy. You do not have exposure to market volatility. In other types of insurance, like IULs and things like that, they are actually indexed and tied to the market, but in this case, it's not. We have significant tax advantages in this as well, which would be tax-deferred growth. You can take tax-free policy loans. And of course, you actually have a tax-free death benefit that you can pass on to your beneficiaries. So this is really a great form of estate planning as well. Liquidity and control cannot be underscored more, right? Having the access to your own capital is very important. Whether you have different, planning needs through your life, whether, it's paying for kids' college, maybe it's that unexpected medical bill that comes up, maybe it's an unexpected tax bill, things like that. Capital that's currently being housed and being efficient at the time, and having control of that is super important outside of any banks. We've also witnessed, lots of turmoil in the banking industry with last year with over 200 banks actually defaulting and going bankrupt themselves, right? This is much safer. We also have asset protection. And the majority of us actually have our assets in government-sponsored qualified plans, in some type of equities accounts, or in trapped equity in our primary residence, right? And if you have teenagers driving or you have any degree of risk coming at you, this is where creditors are going to look, and they are going to see that you have assets that they're going to go after. But in this case, in life insurance, in the majority of states, it's actually protected from creditors. So a great form of part of your asset protection strategy. And again, in terms of legacy planning, managing that intergenerational wealth transfer. So when I stack up all of these different benefits together, in addition to getting that guaranteed growth of around 6% or whatever the rate is that they're paying at that time, and then I add on tax advantages, the liquidity and control, asset protection, estate planning, all of those benefits on top of this, the value is actually significant for me when I did the analysis. So how does the policy actually work? Well, first off, you can fund the policy in a multitude of ways. You might set this up where you're paying for, let's say, a 5-year period, or maybe it's a 10-year period, or there's even possibility to lump sum fund the policy with paid up additions up front. So let's say you're trying to reposition some capital, you sold a real estate property, or you have some type of liquidity event. Well, you can fund that policy and accelerate the policy by funding it quickly up front, and then, however you want to fund in subsequent years. But there's a lot of flexibility in terms of the actual funding. At that point, the policy begins to build its cash value, and then that cash value continues to compound. We typically see that after the first 7 years, you're going to really hit that peak efficiency, and the compounding value of the cash value is really going to accelerate after that. If you need access to the cash value during the policy, and you can actually access it. That's another big question people are ask, when can you actually access the capital? Well, it can be as quickly as 30 days after you fund the policy. Then you can access the capital to leverage it for, again, whatever you want. And finally, you can actually pay back the terms however you decide to do them. So if you want to pay that over the next 12 months, if you borrow 100,000 for that next property investment and you pay that back over the next year, over the next 5 years with a lump sum and 3 years, it's completely flexible to be able to do that. And in fact, even if you did not pay off the loan, it would actually be netted out of the death benefit when you pass, right? So who is this strategy really best for, and why is there really a lot of confusion in the marketplace? Why is it so difficult? Let's say you were to call an insurance provider and you talk to them about this strategy, they really won't know what you're talking about. They get confused. And the reason is because this is a sophisticated strategy, right? This is sophisticated strategy for high net worth individuals, for entrepreneurs, high income earners, and people that are really trying to, leverage these advanced strategies for all the things we talked about, the tax deferred growth, being able to use the same dollar twice, right? Creating that estate planning and asset protection and doing that. So not all mutual insurance companies will be able to provide that or structure it in the right way to support this. That's another really big key takeaway, is that you really want to have this structured the right way with the right advisor so you can be utilizing the system the way it's intended to do. So lastly, just to summarize, right? Again, it's very simple, right? We are focused on capital preservation, where we have guaranteed growth with no market risk. so you can sleep at night, right? You have some great security with this piece of capital inside of your portfolio. In terms of tax advantages, we have great tax deferred growth, or ideally it's really tax free if you never actually exit the plan. And you get tax free access. And by getting tax free access, you're actually borrowing against the policy to be able to then use that loan for whatever you want. And therefore, it's considered a loan and not a taxable event. We have liquidity and control, which is, accessing the capital anytime you want. You don't have to do any credit checks or anything like a traditional bank would do to try to get lending when you need it. You also have this asset protection component where we're really shielding against creditors that are out there. The wealth leverage, right, is huge. So if you can borrow against this and actually create an arbitrage, so let's say your policy is making 6%, you borrow typically maybe at a point or so less than what you're borrowing. You're creating a 1 point leverage there, and then you can invest in, say, a different, let's say it's a syndication, a real estate property, something else that has a much greater yield to it. And now you still have uninterrupted compounding during the borrowing. This is the beauty here, where you're actually using that same dollar twice to exponentially grow your wealth. And then, of course, we talked about legacy planning, which is super important, trying to, prepare for our heirs and provide that tax-free transfer to them in the future. Hope this helps. And if you'd like actually a free copy of an infinite banking awareness guide, you can go to cashflowfortress.com, where we have a free copy that more extensively breaks down these topics. Thanks for tuning in to our special solo series. If this episode sparked something for you and you're ready to learn more, head over to holisticwealthstrategy.com and download a free copy of my book. You'll also get access to our investor community, where we share exclusive educational content, new opportunities, and resources designed to help you accelerate your path to freedom. And if you want to take it even further, book a call with our team to learn about our virtual family office services, or join our mastermind group, where we go deep into building true generational wealth. I'll see you on the next episode.